Alright guys, so let's hit up the GBP AUD 1st of April, Monday. First and foremost, on the open, a dip down 20 pips, made a new low in Asia. From the lows 1.8273, we've nearly done 100 pips. Oh yeah, we have done 100 pips, just over 100 pips. My scope here on GA in particular is bearish. We have to stay below the wick 1.8534 right there to give us another down leg. Let's have a look. So we've got the strong weekly closure. We retested into the box at 1.8500. Came through, made the new low. 1, 2, 3. Worst case scenario, we could maybe pull back into the trend line, then rebound. Round numbers to be aware of, 8,500, again, could be another huge barrier. We can run into that zone, test that zone before falling, so just be careful. I am in USD CAD at the moment, okay, I'm short USD CAD, and I would look to enter this, best case scenario, 8,500, and take it back down into 8.2. Looking at the weekly, we did have an interesting closure on the week. Right here, we did close below the previous wick there, so it tells us momentum has more or less found an avenue. Momentum has been dragged below 8.4, but again, we've been whipped back above, and it's very, very difficult to decipher at times. But what we can see, 1, 2, 3, 4, 5 weeks. Look at the lows that are being made each week. 1, 2, 3, 4, 5. So this could be doing one of two things. Getting ready for a price build-up in more or less a mini flag / pennant. If I was to rough draw this on, okay, bang out to the upside and higher, which could be an option at the moment. Or we could just be simply retesting into this zone because we have the wicks, significant high, wick, wick, wick. More of the story, the wicks to the upside right here display and decipher the market as being a potential for bullish weakness and also signs of a potential big bearish movement coming along. So the market is trying to find its way at the moment, it's finding its feet. It's given us slight clues to the upside. Round number 8.7 here, 8.5 round number. As long as price remains below on the daily closure, below the highs of Friday, we should be in for a nice bearish leg treat. So I reckon we could maybe come into 8.5, start to roll over. So I'll monitor, in this case, the 4 hourly and then the hourly. So I'll leave horizontal ray just at the top of that wick there. And we can also maybe see if this is a Fibonacci. So we take from the high into the low. And what we actually do have there is the fib. So anywhere in between the region 61 to 78, just tap the 78. This could now give us the fib 27% extension, 1.8205, 1.8200. So there's two confluences for a potential target projection there. 8777, there isn't really a confluence with a round number, but it is coming into the bodies of the prior wick candles, the prior candlestick bodies there, the 2, 1, 2. I've taken the high from the wick. I've just taken this leg on the hourly, and I'm looking for a new now potential hourly swing short, back below 8,400 and so on. That's all I can really say about this chart at the moment. I will check back in midweek to give you guys a wrap up and go through any movements that were predicted. Alternatively, you know what we'll do, step back if that zone is broken, but I will wrap that up on the next video and let's see how this one plays out. Hello, welcome to the 3rd of April. It is Wednesday, currently sitting at 2 p.m. US session. So let's firstly go into the price action on GA since our last video. Open of the week, we were below 8,400. Price managed to actually pull back above 8,400. Came back into the region of 8,350. We had one spike, fall back, second candle, 4 hourly, spiked again, created a mini little higher low, if you can see there, just by maybe 5 or 10 pips. Price rallied back to the upside and more or less sat above 8.4 once more. So we're below, above, below, rejected, 8.350, back above, and then once more here we can see the spike came into that region, more or less touched into where the base of the two bodies are right there, and again closed back above 8.4. MA's crossed over to the upside, 8 crossing the 14, and then we can see the price rallied afterwards, creating a high 8.6, 1.8600 where the crosshair is. As you can see, tweezer top formation as well, but you can clearly see we're going from psychological level to psychological level. I did mark this on as a alternative placement high, whereas if the price remained below that, then yes, we can consider a new downside swing. Now, because of the daily, as you can see, due to the day spiking through 8.4, we rallied all the way up to 8.6, but as you can see here, this is actually now forming a new lower swing high. Yes, we did breach the 8,500 region, but we swiftly was pulled back below. We retested that, as you can see right there, 8,550 by a couple pips, but we did have a complete retest of where the ray is on the spike. What I do expect from this right now is if we go into the daily time frame, the MAs on the daily are actually crossed to the downside, and I'm now looking for the weekly to follow suit. All I'm really searching for on this chart is the MAs to cross, the blue to cross the red, back down. This can be now a new lower swing and prominent high. If the market was to come back, pull up and take out this region, the structure would then be broken. We would go from significant low, new high, higher low, higher high, and so forth. However, for now, as long as this level holds and the price is back below the region which I explained 2 days ago, I'm looking for a downside swing. Downside swing on GA can lead us into 1.8200 and maybe even beyond to 1.8. But for now, I'm tracking the price on the 4 hourly. Hourly, we just have crossed over. We've got the moving average crossover there on the hourly as well. And now, immediate target 8.4 intraday. Taking out major structural level, which again is another intraday. Let me just copy and paste that down to here. Target 1, target 2. Once this is broken, then it's all systems go. By the time that does break though, and 1.8400 does break also, price will actually continue to slide. We have to take out this area, which is 1.8272. If this is a prominent lower swing, 75-80% chance now, price action will fulfill at least a double bottom and retest that zone of support, or take it out completely. And then looking at the scope and judging this, we are looking at 1.8200. So unfortunately, price continued to rally, created a few intraday legs. 1, 2, 3, 4. We have this fifth one here right now, where again, if we were to look at the structure on the hourly into the 4 hour, right there, that is the most immediate support, the hourly support, which we have tapped. So steps, ladders, 1, 2, 3. So after making this intraday rise, we have tested 3 times on a consolidation, broke this consolidation, made the new high at 8.6. Now we've retested that as support, where we had double top 1, 2, intraday double top, and now we're just waiting for the next move to the downside. So I highly doubt this is going to pull up. I do believe that we can maybe bang our head on 8.530 and then roll and reverse back down. So I'm just following the overall daily structure, 4 hour structure. I'm just translating it into what I see on the intraday chart right there. But again, if you look at the behavior on GBP AUD for some time, we have been trapped more or less. If we just eradicate this noise up here and then this noise, we can clearly see, if I mark this out with rectangle, we can clearly see that we are stuck in this region. Once this region is broken, if I duplicate the box onto the breakout, break, 2, third zone, 3, okay, we can maybe even surpass 1.8. Breakout, retest, continuation, and so on and so forth. So, little tricky at the moment to grasp the entire bias. on GA due to the price action, but if we stick to the 4 hourly, stick to the daily, and just keep an eye on those psychological levels, we should be good. We should be good to go. So 8.5 into 8.2, that's a 300 pip move. A risk reward setup would look like this, putting on the shorts. And anywhere here would more or less be the entry. Why? Because we've had the high, topped out at 8.6, so we've put the stop just a few pips above. We've came back below the previous point of call, which was on the wick. But once we came back below, we then retested that as resistance. So the head was above water for a while, it came back below water, banged our head on the surface, and now we're looking to roll over into, again, equal low, or maybe even a lower low, just above 8.2, let's say 1.8210. Right there, so a risk reward of 1 to 2.3, looking relatively decent, and that's how I would lay it out, due to the experience over the last few days, and knowing that this was a false upside break, and we're back down, fake out, come back into the range, ready to roll over. Extra confluence would actually be MA's crossing over, and then that would lead us into our destination. Thank you. Okay, hey guys, so onto GBP AUD. This is the success of the week, to be honest. USD CAD and gold have been pretty disappointing in terms of the consolidation, and they haven't really I'll get onto the gold in a moment, but other than GBP AUD, there hasn't really been too much opportunity in the market. Other pound pairs, yes, there has been, but the liquidity and the volume has more or less stayed right here out of GA, USD CAD, and gold. So going into this, what happened was we came above and we had this clear-cut spike, which is on previous videos. I did mention we want to stay below this region. We want to stay below this region for a new downside swing. The new downside swing, due to what the daily is communicating with us, and what it has been communicating, is that wicks to the high, the momentum could not hold. Various occasions, we've gone from 8.7 psychological level, then 8.6 psychological level. You can clearly see the wicks have spiked into 8.6. You guys know GBP AUD loves the psychological levels, and it's just repeating itself over and over and over and over again. Moving averages are crossed to the downside here, and we finally have broken 8.4. But if you look at last week, we had the same scenario. Monday came, Monday opened, gapped a little bit lower, but then boom, we shot up over 100 pips. Next downside target potential is right here, which is 8.2, which is 122 pips away from current market price, and that is my short target. We can ride down to 1.8 afterwards, but for now, let's just go into the 4-hour time frame. The entry here is quite simple. If I go into the short position, what we've seen was market fulfilled orders at 8.6, came back below, and then this is where it gets interesting. So this is why we have to focus on the fine details. The finer detail tells us that market came back up to retest the zone as resistance, because it was support at the back end of these two 4-hour candles. So it was support for around, I would say, anywhere in between 6 or 7 hours. We went back below, we retested, and this candlestick, because it's left the wick behind through the key area of resistance, that is where your entry would be. Bang, straight after that candle. Stop would go 3 to 5 pips above the wick, because that tells me liquidity has been filled. We're ready to now roll over. We retested it once more, hence why we give the breathing room, and then target 1 could be the base low, and then target 2 could be 8,200. This was a risk reward ratio of 1 to 5.9. 50 pip risk for 300 pip potential. Right now, it's cleared more than 50% of the way. You guys have already gone through the trade management videos 1 and 2, and because we're 50% of the way through, you know that we should take 70% and then let the remaining 30% run. So great success. What I can also see here is that, boom, we snapped intraday level. Nice 4-hour, straight off the candle bodies there. Again, you've learned that in the videos in section 2. We finally broke through, moving average crossover to follow through, but this is where many people get into the market on the breakout. We are getting in way, way higher where the liquidity is filled. So this is why we have to learn and focus on the fine details. If you did miss that entry, there's another opportunity right here. Spiked into it on the body of that close, when the candle closes, you get in, and the body right there where my cursor is, that is your entry. And that could be a great risk reward setup. Market then rolls over, breaks through the moving average, That's another confluence fill, then breaks through not only the 4 hourly intraday level, but also 8.4. Market retests 8.4, at the same time retests the 8 moving average, and now we're just converged to the downside. So this is guiding the trade right now. I'd be surprised if this doesn't continue to drop throughout the rest of the day. We can find maybe some minor support at 8273, anywhere where this is. But next week, I do expect a huge leg to the downside. So as you can see, price action has been relatively choppy, but we can see many trade opportunities within all of this. So I'm excited for Monday. And yeah, I'm going to leave this position open to come through and fulfill. Now I've took 70% off at 50%. Stop loss is now brought 5 pips past entry. This is now risk free. So that was a good run on GBP AUD this week.